Welcome back to Chairman's Briefing, brought to you today by Falcon Gold. I'm Rachel Lee. Let's get into it. In the wake of the latest core price index, gold markets are experiencing downward pressure, with December futures trading at $2,536, down 0.28%. Now, the headline inflation rate moderated to 2.5% year over year, slightly below expectations, while core CPI ticked up 0.3% monthly, marginally exceeding forecasts. This mixed bag suggests that the Fed's inflation battle isn't over, but progress is evident. Market sentiment is leaning towards a measured approach from the Fed, with a 25 basis point cut now seen as more likely than a more aggressive 50-point move. As Paul Ashworth at Capital Economics notes, housing inflation remains stubborn, potentially tampering the Fed's easing trajectory. Now, traders should remain vigilant as this nuanced economic landscape could yield further volatility in precious metals and rate-sensitive sectors. Much of the rationale around holding a meaningful component of gold and related equities in one's portfolio is the nearly impossible to comprehend level of fiat paper and sovereign debt sloshing around in the system. The U.S. federal deficit currently stands at an unprecedented $35 trillion. Eric Strand of AUAG Funds, for one, sees fair value around $4,000 per ounce. Despite the Fed's tightening, Strand argues the debt to GDP ratio, currently at about 120%, supports higher gold prices. He dismisses concerns of a repeat 2011-style bear market, pointing to political reluctance to curb spending. With inflation likely to persist, Strand advocates for gold and silver as wealth protection. He also highlights the undervalued mining sector as an attractive entry point for investors, predicting sustained value appreciation in the coming years. Resource-hungry producers are on the hunt, anxious to enhance production profiles and bulk up mineral inventories to ensure future operations. Starting at the top of the food chain and working our way down is AngloGold Ashanti. The company is taking a run at Egypt-focused Centamin in a paper and cash deal valued at $2.5 billion, a move that will elevate the producer's rank among the gold-producing bigs to number 4. The prize in this predator's eyes is the Sukari gold mine, Egypt's first large-scale modern mine, a deposit boasting a 13-year mine life and a reserve base of 5.8 million ounces at a grade of 1.2 grams per ton of gold. Now, last year, Sukari produced about 450,000 ounces of the glittery metal. This acquisition will bump AngloGold's annual output to roughly 3.1 million ounces. Next, First Majestic Silver announced an agreement to take out Gatos Silver in an all-paper deal valued at $970 million. The prize for First Majestic lies within a number of mineralized zones in the Los Gatos Silver District of Mexico's Chihuahua state. Though the market's reaction to the takeover was somewhat subdued, Gatos has been on a serious tear since early March of this year. American Creek is set to be acquired by privately held Cunningham Mining in a deal valued at $207 million. Shareholders will receive 43 cents per share, a whopping 274% premium over the June 5th closing price. This all-cash transaction has caught the market's attention, with American Creek stock already up 153% from its September 4th close. Now, the deal's also got heavyweight backing. Eric Sprott's company is on board, holding about 15.5% of shares. Cunningham is eyeing American Creek's 20% stake in the Treaty Creek project, particularly the expanding Goldstorm deposit. With the board's unanimous approval and a fairness opinion in hand, the deal is expected to close by year-end. Treaty Creek is flanked by Seabridge Gold's KSM deposit to the southwest and Newcrest's Brucejack mine to the south. KSM is ranked the largest undeveloped gold project on the planet. Now, aside from American Creek's carried 20%, Tudor Gold holds 60%, while Tuton Resources holds the remaining 20%, which is also carried. Amex and Probe were both sporting similar market caps when they dropped mineral resource estimates on September 5th. One company's share price went solidly north, and the other went way south. Both companies are widely followed and both were underpinned by high expectations. Amex Exploration's Perron project in the northwestern Abitibi region of Quebec came in shy of expectations, with some market participants hoping to see an ounce count well north of 2 million. Executive Chairman Jacques Trottier said that there's significant room for this resource to grow, as much of the property is yet to be explored. He also cited new machine learning and AI techniques that have generated new high-priority targets. The potential catalyst for the company is a PEA due sometime in Q4 of this year. Now, on the same day, Probe Gold dropped a mineral resource estimate on their Novador gold project in Quebec's Val-d'Or region. We're talking 6.7 million ounces in the measured and indicated category. That's a 77% jump. And the inferred resource more than doubled to 3.3 million ounces. Of course, the market's loving it, with the stock eyeing its all-time highs. CEO David Palmer did not mince words, calling the increase, quote, nothing short of amazing. With over 10 million ounces total, Probe's playing in the big leagues now. They're gunning for production, kicking off a massive drill program this fall to prep for next year's pre-feasibility study. Ascot Resources surprised the market late last week when it announced having suspended operations at its premier gold project in BC's Golden Triangle. Now, despite pouring an impressive 3,430 ounces of gold in the past 2 months, that's over 4 times what they did in Q2, they're facing some underground hurdles. Mine development at Big Missouri and Premier Northern Lights is lagging, leaving the mill hungry for ore. So Ascot's taking a step back to focus on development, estimating a 3 to 6 month suspension. They've got about 15 million Canadian dollars in the bank to weather the storm, but they're on the hunt for more funding to get things back on track. CEO Derek White calls it difficult news, but sees it as the best path to sustainable operations. Keep your eyes peeled. This could be a make or break moment for Ascot. Perpetua Resources just hit pay dirt with their Stibnite gold project in Idaho. The U.S. Forest Service gave them a key federal authorization, sending the stock to a 52-week high. This isn't just about gold. Stibnite's sitting on a mountain of antimony, which is a critical mineral that China is clamping down on. The Defense Department is already chipping in $75 million, and a potential $1.8 billion loan is on the table. Keep your eyes peeled for this one as well, for the final nod that's expected by year-end. This could be a real game changer for U.S. mineral supply and Perpetua's bottom line. Victoria Gold's Eagle Mine collapse isn't just a corporate problem. Initial $111 million cleanup estimates likely lowballs the real cost. History shows that these bills balloon. For example, Faro Mine went from $200 million to $5 billion. Yukon's fronting cleanup cash. However, taxpayers are on the hook if Victoria Gold's assets fall short. The pattern of mining companies bailing and public coffers covering cleanup is all too common. Watch for stricter regulations and potential tax implications as Yukon grapples with the recurring issue. China is taking Canada to the World Trade Organization over new tariffs. We're looking at 100% on Chinese EVs and 25% on steel and aluminum starting October. Beijing's calling it protectionism and threatening retaliation on Canadian rapeseed imports. This isn't just about Canada. China's battling similar cases with the US and EU. Now, as China pushes exports amid a slowing economy, expect more countries to follow suit. Watch this space as it could shake up global trade and markets big time. There could be new life in an abandoned Minto copper gold mine in Yukon. The territory's Supreme Court has approved a private bid by the Selkirk First Nation to buy the mine's facilities and some of its equipment in a milestone ruling on the way to what could be one of the first Indigenous ownerships of a mine in Canada. And that's a wrap for this segment. If you want these insights in your inbox every Thursday morning, subscribe at the link below. You can also catch me here on YouTube to watch instead. Turn on your bell notifications to stay closely updated. Thanks for being a part of Chairman's. We'll see you next week.